Hey everybody, DayTraderRockStar here, and this is a market radar which we look ahead the following days for Thursday and Friday. That's April 5th and 6th, 2018, and we just came from a tremendous reversal in the markets today. We started off, and again, if you're an active trader and you get my videos every night, or when you do get them, when I do put them out there, we usually put in this video. What I want to put in this video is a market radar which discusses the current conditions of the market and a technical view going forward, just a couple days, or kind of a weather forecast, a radar, if you understand the pun there. The other thing I want to bring is some education, because every day you could actually see some of the great setups that we trade live on Day Trading Radio. Now, I start off the morning about 8:30 on the show, and we trade the markets from 8:30 to 4 o'clock every single day live on DayTradingRadio.com. So come on by, check it out. You could actually watch the screen. You could hear the traders. We have a lot of things going on there. So check that out. Also, we're going to go over some stocks for you also. So let's just kick this off. The big news was the Chinese tariffs. That was the news last night that caused the market to gap down. Kind of retaliation from China on the announcement of our tariffs that we're going to, I don't have all the data in front of me, but it was pretty much tit for tat. Chinese came out with their tariffs that equaled the same amount that we had against them. I think it was 20 billion. Maybe it was a little bit more. And then basically the market overnight sold off pretty hard into that. So we woke up this morning, and if you looked at the market, you saw futures were down about 500 points. S&P futures were down 30. The Nasdaq futures were down over 100. And that's been, look at these candles on this screen. These candles represent something you don't normally see. Back here last year, very nice rally, very steady, and then all of a sudden volatility comes into the market. And look at these ranges, 1,000-point ranges. Today we had about 700, 800 point reversal swing. We started off down 500 points. We ended up 200 points. So we had over a 700-point swing in the price of the Dow. It's incredible. This type of setup typically is very bullish when you have a big reversal. The momentum carries on into the next session. Now, this is a perfect time for this candle to happen. I hate these type of candles to happen on Friday, because then you have news over the weekend and things just kind of get lost in the shuffle. But when it comes midweek, or where there's a couple days to follow up by, you can actually see this thing continue on. And there's a good example here. We've had two setups here in the market that kind of are almost identical. We could see the volatility break down here underneath the 20 through the 50. Big candles, down day, up day, kind of a neutral day, then a big down day, then a big up day, and then we had a nice rally. And what was great about this is this was what we call a divergence setup. And you could see that this stochastic, this is our 9.3 stochastic, come on top here, and the 14.3 on the bottom. But basically that 9.3, you can see that dip there in this low, and we were actually underneath that red line, which is our 20 line. And then we came back above it on a bounce, and then we quickly flushed and took out the lows, and that gave us that series of, and I'm going to bring this over here. Let me start a new trend line. You got actually the low here and the low here. So that's basically what you're looking at. What are we doing here? Let me get my trend lines up here. So right here. So from this low down to this low, we had this nice lower low, but we could actually see that lower low. We didn't really break down under that 20 line, and that 20 line is an important line that I use as a reference point during the show when we talk about divergences and how to spot those, buy side and sell side. These are the #1 go-to trade setups. When we get that, then we have a high probability of a directional trade, and as you can see, this one really played out well. And from that point on, we got overbought, and then we pulled back and chopped around and pushed higher. And the patterns play out. The market goes into a trend, and until it breaks out of the trend, and the new trend starts. But the times we trade, the times that we really make our money, that 80-20 rule, make 80% of your money 20% of the days, are these divergence days and these other what we call high probability days. These are days that the market sets up in certain technical patterns that we are very familiar with, and we understand what's going on underneath the market. This indicator right here, the stochastic oscillator, measures, is measuring the price here, and it compares to the price, and we get a plot of this. So this, not to go into a whole, I'm not going to go into a whole deal on stochastics, but that's what I trade and that's what I teach. So I'm not going to teach it right now. But the signal is that the momentum has shifted even though the price is moving lower, and that is our really go-to signal. Now, I want to say that we had a beautiful divergence back here a couple days ago. And again, a big down day, up day, down day, neutral day, up day, down day, up day. And then we had a gap down day today. The gap down, meaning that the future started off lower, we're going to gap up. But it didn't really show up on the chart here. You could tell. It was like, even though we were 500 points down, this is the S&P, and the S&P, it just, by the time the market, pre-market came along, you could see the gap down here, but we just rallied right out of the gate, all the way, and closed on the highs. It was a tremendous reversal. This is, something for something for the record books. So that is a really good sign going into tomorrow. Very nice sign. The size of the range here, we have to be very careful because you can pull back into the range before following through and moving higher. So we could see actually a pullback into the range before actually, but I do think that this will resolve to the upside, mostly based off of this divergence here. Very similar to this one. Not the best divergence in the world, but definitely one that qualifies as a divergence. The trend line above us would be a focus point, and that 2674 level is the top of that recent candle here where we try to get a little bit higher. So that would be our first level of resistance here on the cash chart, which is about another 30 points, looks like, higher. And that would bring us up there. And then, of course, we have the gap up here in the 50-period moving average and other lines and the big trend line up here. And eventually we'll get there. That's something we'll be watching also. So looking good for tomorrow. I would, just say one thing. News is king. Any news, this could turn this market over again. We could gap down another 300 points, and we could start fresh. So it's just, right now, things look good how things ended today. Technically speaking, like I always say, if it was back in the 90s, I was trading, I see a candlestick and this type of activity going into the close, I would definitely lay my money down for a follow-through day. This is a different age, and so much news out there that you can't really go by that. You have to, take each day on its own merits. But like I said, this is a very bullish candle, and we're going to look for this to follow through tomorrow. So now let's go to a couple of the best bets. Today's best bet, or this week's best bet, was Under Armour. And as you can see, huge move today in Under Armour. Huge. We've had this move before, and we had some follow-through. So I'd like to get another follow-through day tomorrow on this. This has great action. We put this out as an HPS watch list play. Now, I'll explain what that means in a second. HPS watch lists are the stocks that go out as a watch list, a video watch list, and a automated watch list that is connected to the Day Trading Radio membership dashboard. And the membership dashboard is, where all the community, all the traders gather each day. Hundreds of traders gather, and they have the trade alerts, they have the divergence alerts, they have the chat rooms, they have everything working for them. They're in there, and we're trading together. This is the watch list that goes out every week on Friday for the following week. This was our best bet going into this, and you can see we're starting to pop. It's been chopping around. I think I actually put a new candle in here. A new, let me double check. I think we have a new chart I wanted to show you on this. All right, this is that new chart. So when we originally had that set up, we're looking at maybe a kind of a flag, but this actually turned into a much bigger and better flag. I'm going to clean it up a little for you. This consolidation right here was kind of an area where we really liked it because we started to hold this little pivot. We had a nice candle. We were able to put that underlying trend line in there, and then we decided to really use this trend line as our our go-to trade. So we expect it to come back down to the trend line and bounce off of it. The downward trend line, you can see the big pennant formation, if you want to call it that. But fact is, this thing exploded out up to the 200 period moving average. Good volume. Love to see some follow through on this. The base is in pretty nice. We've traded this one before out of these patterns. A nice wedge pattern there, and a nice breakout. And again, these, the optimal trade time for these type of setups is 3 to 5 days. So if we could time this right, and you're still getting that momentum, I could definitely see us getting a little bit more upside tomorrow. My target on this is 1650, but I also said that we might get out around 16. So these things are not etched in stone. You have to, feel the market out. But we got a great trade on this. We have a little, maybe a little bit more to go. I got options and common on this. So I'll probably end up taking it off tomorrow. Hopefully we get to our target and we just move on from that. So that's Under Armour, looking for a follow through on that. The other best bet of the week was WBT. And again, pretty decent candle today. This has a nice underlying trend line. There's a nice pivot area down here, 1, 2, 3, 4, and we're trying to hold on to this. This has been a nice looking stock. We go out to the weekly, you can see it IPO'd in 2016 and just had a nice, so this is the first really nice pullback that the weekly got oversold. It doesn't happen too often. Back here we got a weekly oversold. Here we got a weekly oversold. And now here we have a weekly oversold. And with that, well, I like this area, so I'm taking a position into this, down in this zone. Like it a lot. I think we move up, and I think actually we move out, move it up and out. So it's not a big, it's a cheaper stock, $20.80. Actually, it's around $19, but we're looking for a breakout of that $20, $21. I think you have a good trade on this, about $2 trade on this, which is 10%. So that's a really nice one going forward. And again, all these are outlined for you. So if you're as a member, I don't put these videos out too often, but I'm giving you a couple examples so you can follow along and get a feel for what you can get when you trade with us here. So this is a trade we took back here. This was the best bet. We got right up to our profit zone. Then we were waiting for our buy zone to come in. This is something that you would get like on Friday, and when you get that buy zone, if I get in, you'll get an alert on the dashboard. As you can see, we came right down to it, and we had a nice reversal. So we're right in our buy zone right now, right in our buy zone. The stop is automatically put into the system. So that means if the price hits any of these levels, you will get an instantaneous text alert and an email alert right at the same time. And especially if I get into the trade, you also get that alert that we're trading. But this also looks good, and again, you can see where our profit zone is. Looks like a nice profit, a nice trade coming down the pipe for us. And the third one I want to throw out, there's another cheapie, $27 Corning. We've traded Corning many times. And this looks like a bargain, It really does look a bargain down here, way under the 200 period moving average. There's a decent trend line up here. We have a nice tight channel line. Not a divergence, not anything that's playing out yet, but I just like the level down here. So I am long this. There's, like I said, there's not a divergence yet. Would love to see this move, and today, as we left today, actually I was seeing some relative strength in what we call consumer defensive stocks, the Procter & Gamble, the Kellogg, the Kimberly-Clark, KMB. All of these were really just nice moves today. So the KMB, actually, you can see the little pullback starting to move back up. This is another one I like. I like this one a lot. And there's a lot of great setups out there. And for the rest, again, we have the rest of it is on our watch list going into the rest of the week. And Friday, I'll be putting out another watch list for the members, and I'm sure it's going to be packed with all this volatility that we're getting, these new setups. This one looks really nice. We'll probably end up seeing this one moved again tomorrow. Now, the last thing on the video, I want to try to keep the video down under 20 minutes if I can. I want to just show you, and we're going to go out to the market right now. This is the current market conditions. You can see us grinding back up. I don't think I have the high lows on this. Let me see if I can put that in fast. All right, as you can see right here. So now I have the the opening price. Let's see here, the low of the day and the high of the day. We're right at the highs of the day and actually pushing higher. Or is that the current day open, high, and low? I would expect that green line to move a little bit with the high being taken out here. I wonder why that's not happening. All right. Oh, it is. It is moving. I just can't see it under that candle. It's up there. So we're at the highs right now. Believe it or not, we're at the highs. So this is looking good. And the last thing I want to actually share with you is how we trade divergences during the day as we're waiting for our stocks to set up. Always looking for the opportunity in the futures. Now, this is a good day to, this is a good night to watch the futures overnight. It's not that I could actually get up and stay up overnight because I'm up early in the morning. We trade all day, but some people get up about 3 in the morning. This is when this market really starts to move. So 3 o'clock in the morning Eastern Standard Time is when European markets start to get going. Asian markets are underway, and we can actually start to see you can actually trade the market like you just traded it during the day. So you get those divergence setups, you get everything working out really well for you. So I'm going to zoom out here, kind of scroll back, see what we can identify for you. Now remember, this was pre-market, and we actually sold off really hard. This was that news last night, and then we came down. This level right here, this blue line, I wanted to point out something. When we talk about divergences, and the one thing is just to kind of tip of the day. When we look at divergences, it's a standardized divergence that we look for. It's a low and a bounce, and then a lower low. All right, and then when the stochastics, what the stochastics are going to do with that lower low, they're actually going to hold up and put a higher low in. That's on the buy side, the opposite for the sell side. In lots of cases, you'll see a candlestick come down, make that low, and then a return pushing back down. We don't take out the candle, but we do come down and we take out the body, or at least get equal to the body of the first stage. So we're looking at that body, that closing candle on the closing body candle, or the body here. And remember, the candles are broken down to really 3 different areas. You have the low, the high, the open, and the close, or four different things. That's what you can read on these candles. But we're paying attention to, again, where the big body is, not the tail, the low, but basically where that open was and where that close was. And we kind of sometimes throw this out and say, maybe that was a fast flush, or it could have been just an overreaction or something. There's a lot of noise that comes in with this thing. So this would be considered almost a divergence for me. If you could actually get, we have such a good criteria for divergence, but if you could actually see that and put it together in your mind, saying, wow, we came down to that hand, and this is very steep here. This is the other thing we want to pay attention to is the steepness of the divergence with this. Now, this one came back down. The 9.3 came right back down. Didn't show us any divergence whatsoever. But the 14.3, which is actually the better divergence indicator, that I like to have that 14 as confirming. So seeing this one's really a really good steep divergence versus the price level. This would go out and say, just remember, if you see something like that, there's a good chance that this divergence plays out to the upside. So that was our first really interesting setup. Now, I remember trading today and watching these moves. There was a couple divergences that played out, but the market was so strong. First divergence of the day, very obvious at 9:30. Most of the divergences you will find come into that very volatile time frame. Maybe it's 9:30, maybe it's around news. Here you have the 920 low, and then you have a little lower low right there, that little candle. And again, all it is, it's an obvious look at this. It's what's great about the divergence setup. it has to, fall into one criteria. It's easy enough to recognize. It has to abide by this rule. Second low has to be, it has to be a lower low, and that higher high, and the steeper the higher high, the better the divergence. In this case, you have that perfect right here in both the 9.3 and the 14.3. 9.3 is very steep. 14.3 is borderline on the 20 line, but either way, it does qualify as a divergence. And again, you can see a beautiful move on that. So the market here runs up, pulls back. We don't really get any divergence tops. And in some cases, you're not going to, like I said, I like just taking divergence trades. There's other people who could take trades off of this. And we didn't even look at the 5-minute, 3-minute time frame, which I should I'll look at with you. But let's go back out here. And here's another great example. All right, so here's our first sell-side divergence. Now, I don't have the tradeometer here with me, but there's some great tradeometer setups here that I have on my chart at the office. And we usually put a circle there. So if the tradeometer and the divergence lines up perfectly together, that's a really good setup. Now you might look at me and say, well, this move continued to move up, but not really. For this type of 1-minute time frame of the divergence, we're scalpers. This is a sell signal for us, and that sell signal is good until we get down under that 20 line. So that's actually a nice move. Who knows where you could have got in 2600, 25.99, 29.58. The fact is, came all the way down, wherever it came down to down here under 25.95. We consider back in the day, trading these for 3 ticks sometimes, 4 tick, a point, 2 points is really good. The average move we're getting now on divergences is up to 5 to 6 points, sometimes 10 points on the thing. So 4-point move. Even if it's not giving you a full 4 points, maybe there's a 7-point range between this and this, and you're going to try to get 2 points out of it. I'll take that bet every day. And 2 points, it's one per contract. That's $100 for every move and every divergence, and that's not even trading big. So here's your divergence. You get the signal, you take the trade, you take your fast trade off, and then you move to the next one. The next one was identified at this point, and that's when I jumped right on it and pointed it out. Same exact thing. Actually, this divergence was a little bit better. And you can see this one here pulled back, and then pushed a little bit higher. But again, the pullback was intact. That's what we wanted to see, a divergence pullback, got oversold, then we started chopping around and starting to move back up. So it does give you a good trade. It's better to have the divergence on the buy side when the market's trending so hard. Like here, this is where you're going to get the bigger moves. But even a sell side divergence, you get a small little breakdown, You could profit from those. You have to understand, and you have to read this market. You have to see the kind of read the tea leaves, saying this is something special going on. The market's very strong. We're holding the moving averages. The slow stochastics are in kind of trending higher. So we have all these things going for us. And then again, waiting for the next setup. Here's the next setup. I don't even know if I even mentioned this one during the day. I think it was during lunch. Or right before lunch. Oh, it was during my workout, maybe. You can see what we call a mathematical divergence here. It's a higher low on the stochastics and a lower low on the price. I like to keep that 20 line as a reference line. So I want to have that higher low above this line here. And, I say that's important to learn the good basics and good foundations of trading, that you try to keep that rule. A lot of people will say, well, that's a divergence. I need to get in. Lots of times it'll work out fine. I mean, divergence is a divergence. It's giving you a signal. It's up to you if you hold that 20 line and look for only the best divergences, or, you just take every divergence. Most of them, 80% of them are going to give you a nice move. So here you can see a little divergence here and a nice move up. And then we're just going to rock on here. Going down, and I can spot these things pretty good. Here's a little divergence back here that happened at 2:30. All right, here we are. You can easily, all we're looking for is that trending market, but we failed to get back above that 80 line on the sell side here. In this case, we kind of did. Again, this is where you have to make that decision. What kind of divergence trade are you going to be? Pure divergence setup, or just a mathematical divergence setup here. And this one here, you can see a little pullback. Pulled back into an oversold level. We got oversold and the trend continued back up. And again, not giving you a lot, but giving you a bigger move than any other moves you're seeing. All right, so that's what we're looking for now. The overnight trade. I don't know if there was anything else here really. I don't know what this was here. The other thing is going into that 4 o'clock time frame, 3:30 to 4 o'clock. We have to be careful, especially on a very strong market. Sometimes, on occasion, you get a divergence and it just gets run over, but that's usually because you're trading a more hyper time frame. The hyper time frame early in the morning, or coming into the close where there's a lot of orders and trading imbalances and orders being paired up. So that is that. So now the overnight trade is going, and again, you can see things are really quiet. But you will find these divergences. You will find this divergence. You're actually seeing a kind of a small divergence here. Small divergence here. And then when we talk about the divergence, the important part of that divergence is having a trading plan behind it. Now, that's what I specialize in, is developing a trading plan around divergences, how to set your stops, how to recognize them, what kind of trades, what kind of profits, scaling out, how to go up and contracts. All this could, you get to learn here at Day Trading Radio. But if you don't have time to listen in every day and you want to learn more about divergences, go to theschoolofstock.com, theschoolofstock.com. And you'll get I have all my education broken down into 2 courses only. I really packed these 2 courses, very reasonable. The divergence course is my pride and joy. We have a lot of students in this course. Oh, let me get this back down here. You can see, and it has a lot of. It's $349. It has a lot of information how to spot divergence trades. This is basically the whole curriculum. And you could go and check it out. Everything's here: position sizing, trading divergence, all time frames. So this is my. Look at all these. These are all different lessons, and I'm always adding lessons to it. But this is all about building a business plan around divergences. All right. So definitely check that out. I think that's one of the best. And if you're just starting out trading, the divergence course is a little bit more advanced. I recommend going through the whole trading methodology. The HPS, the high probability trading methodology, is broken down in a big course here, and that is everything from ground up, moving averages, an overview of the course, philosophy, just everything. Developing a trading plan, trend lines, patterns, support and resistance, stochastics. I even do a section on stochastics to get you started. All the different patterns I trade, and what's important is that you get my playbook trades. Every trade that I tend to get and send out is based off of one of these trades. So we have the playbook trades. Again, you can see all the lessons are in this course. Check it out. There's actually some free ones, free lessons that you could check out if you want. Just click on them, and you'll. And each lesson is a detailed video. Lots of times there's some charts and stuff there for you. It's an overview of the course there. School of Stock. So schoolofstock.com if you want more information on those divergence setups. And that's it. I think that's going to be it. We're going to go into tomorrow. We're looking for a big gap up tomorrow. We're going to take some profits into it, and we're going to have a great day for the next 2 days. So hopefully I'll see you at Day Trading Radio. I want to put on the show right now from my home office. And we're going to maybe follow the markets overnight. Right now, futures, I don't have the futures in front of me, what they're up. That's all at the office right now. But I'm going to get that set up for you, and I will talk to you in the markets tomorrow morning. Have a great evening, and I hopefully this prepares you for tomorrow.